Key indices on Wall Street held higher in a session marred by volatility amid a likely U.S. government shutdown to end the month of September with gains. The S&P 500 reported its best September in 15 years, while the Dow Jones gained for the fifth straight quarter. Asian markets that are open today are trading mixed, while the GIFT Nifty is also indicating a muted start to the new series. Oil prices settle lower as investors brace for a supply surplus amid the OPEC's output hike proposals. Gold prices, meanwhile, continue to hover near record high levels on the back of a soft jobs data, bolstering hopes of a rate cut. And the outcome of the RBI's Monetary Policy Committee's two-day meeting is expected today, with the central bank likely to take a pause on interest rates and stance, even as the GST rate cut could see it revising up the GDP growth and lowering inflation expectations. A dovish tone may, however, keep the door open for future rate cuts. It's the start of a new month, the start of a new series, the start of a new quarter, and the start of the second half of FY26. Good morning. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Center. I'm Hormus Vatakia. Greetings to all of you all on the occasion of Dussehra, of course, a day in advance, considering tomorrow is a holiday. We start off with a look at how the Asian markets have started off. Meanwhile, the Chinese markets and the Hong Kong markets, though, are shut for the day today. Hang Seng is shut on account of a holiday. The Taiwanese index, though, continues to do well for itself, almost gains of around 1.75%. The underperformance, though, is coming from Japan. The Nikkei is down around 1% as we speak. The Kospi continues on its merry ways, still trading with gains of 0.7% and extending its year-to-date advance as well. Now, by this, for our own markets, you pull up the GIFT Nifty, it'll give you an idea of how our own markets are likely to start off, and that will give you an idea. And after 8 days of losses, the implied open currently in the negative, a 15-point downtick is what the implied open is suggesting at the start of a new series. 8 days of losses for the Nifty. The last time we saw something like this was between February the 18th and the 4th of March of this year, when the Nifty had declined for 10 sessions in a row. But the big event of the day is, of course, the RBI monetary policy, and the Reserve Bank of India's MPC will be announcing its interest rate decisions today. Ritu is here with all the key expectations. Ritu.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC TV 18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause at this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Ritu, thanks a lot for that. All eyes, of course, will be on RBI Governor Sanjay Malhotra later in the day. Let's also now go across to Lata, who is joining in for an editor's take on the policy.
The markets want to hear a dovish RBI, not necessarily a cut. The problem for RBI will be how do you communicate dovishness when you have to willy-nilly hike the forecast of GDP. The GDP forecast at 6.5 with the Q1 GDP coming in at 7.8. They have to raise the GDP forecast and then to communicate dovishness is tough. Now, the market will first and foremost watch for the CPI forecasts, which also have to be lowered. They are standing at 3.1. The poll that we did said that the market has to come, that RBI has to bring it down closer to 2.5. Plus Q1 next year, the forecast is at 4.9. Will they bring it as close to 4 is what the market will watch out for. Those are the two numbers which are very crucial. But the market will also look at the monetary policy review, the MPR, which gives the full year forecast for next year. They will watch if that is close to 4. All these are things which will give market an idea whether RBI wants to be dovish. But above all, they will have to look for the language around growth. The RBI will raise the forecast, but the market will want to hear where the RBI says that it will stand ready to help if growth falters. Those are the kinds of phrases that the market will want to hear. Of course, more than anything else, the market wants to hear the word OMO. But there, of course, it's very tough for the Reserve Bank to oblige. A rate cut will be good for stocks and consumer good companies. It will be bad for bonds because it will mean no more cut. It will also be bad for banks.
Lata, thank you for that update. The RBI monetary policy decision, one of the few major triggers that you have for today's session. But to list out the other major triggers of the day, our research team is joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. First up, Gaurav is here to get us all the market cues we need to watch out for. Gaurav, good morning. What are you watching out for today?
Nifty yesterday, Nifty slipped a little bit, but it defended at 24,600 level. And in fact, if we look at the option data, there's a high interest in put option data for 24,600. So definitely we'll be watching out if Nifty will be able to defend this level. But apart from that, we've got China market and Hong Kong market where they have national holidays, so these markets are closed. From US market, we are seeing some kind of news flow coming up in terms of the shutdown of the government. In fact, Vice President J.D. Vance, he has highlighted this. And at the same time, Trump trade chief expects US to ink more deals during the Asia trip. So definitely there are some cues which are coming up from the US market as well. In fact, when we look at Nasdaq, actually it ended, it ended in red, but S&P and Dow Jones both ended in green in the last session. From the Indian point of view, we have got RBI policy today, so definitely watching out on Nifty, banks, and specifically all the banking stocks. Apart from that, India and European FTA that comes into force from today. Remember, 100 billions worth of investment is going to come in the next 15 years because of this FTA. Other than that, there are some reforms which will be applicable from tomorrow. First is that NCPI, who is going to stop UPI P2P collection request. New online gaming regulations, they are also set to be implemented from today. And next is that RBI's project finance norm. So definitely these announcements were there earlier, but they will be implemented from here on. And that is the reason why we will be watching out on companies who will get impacted, how the impact is going to be, and how the commentary is going to be. Lastly, let's also not forget that Jain Resources, this will get listed. Remember last day we saw 4 IPOs coming up with the new listing. So let's see how it works out for Jain Resources today.
Gaurav, thank you for that update. Over to Upasna, who lists out the stocks you need to watch out for today. Upasna, good morning. What's on your list?
Good morning, Hormaz. First up, let me start with Lupin. The company has received US FDA approval for Rivaroxaban for oral suspension. Next up is SKF India. The company appoints Ailesh Kumar as the MD for the term of 5 years with effect from 1st of October. RITES is the other one on our radar. The company signs MOU with Etihad Rail to further augment business collaboration. Next up is Oil India. The company has signed an MOU with GAIL to enhance collaboration across natural gas value chain. Next up is Nestle. Even this stock is on our radar as the company signs MOU with Ministry of Food Processing Industries at the World Food India Summit. Arvind Fashion also in focus as The Sailesh Kumar Chaturvedi, which is the managing editor and CEO of the company, has given the resignation. Time Technoplast, the company has obtained BIS certification to manufacture and sell polythene pipes for gas distribution and achieving its planned Q2 FY26 milestone is what the company has indicated. HUDCO also in focus on the back of Q2 update. The company says that there's strong disbursement and sanction for H1 FY26. And if we look at the Q2 disbursement number, it has seen a growth uptick of nearly about as high as 44% on a YoY basis. And lastly, rate gain also in focus as the arm acquires US-based company Sojin for $250 million. So all in all, we'll be closely watching out for all these stocks today.
Of course, Upasana, thank you for that. And aside of all of this, keep an eye out on auto names as well. The auto sales numbers that will be coming out all through the day. Lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. The start of a new series. What is the historical data indicating on the road ahead?
Well, it's the start of a new series, so let's look back at what September series was like. We saw about 110 points on the upside on the Nifty this time around in September. And it was a fairly volatile series. Between the highs and the low, there was a 1,200-point move that we saw. And prior to that September series as well, for the two series, we saw a loss of 1,100 points on the Nifty. So it's all things happening. October historically has seen big moves, but more on the downside than the upside. So 5 out of the last 5 Octobers, 3 have actually seen big gashes. And last October itself, we saw a near 2,000-point decline on the Nifty itself. And keeping that in mind, the conviction on the short side is a lot more this time around. The FIIs or the overall rollovers have been 83% versus last 3-month average rollovers at 80%. More short positions have been rolled over. And the open interest on the Nifty as well is at 1.17 crore shares. This is at the start of the series. This compares with 1.55 crores that we've seen as a 3-series average. So on the heavier side, rollovers are higher. Where are the rollovers high? They're on the short side. FIIs, remember, started the September series with a record low position of 8%. And guess what? October, they've gone a notch lower. Just 6% long exposure is what we've seen. So at the start of a series, it's the lowest long exposure that the FIs have. On a net basis as well, the exposure is closer to nearly 2 lakh contracts on the short side. And the clients on the other side are fairly positive. Their long exposure is at 74%, net contracts at nearly 1.25 lakh. What this means is that, in September, the shorts did not get a lot of follow-through. And every time the FIs start on the adverse side from the long positioning, the next few series, we see big up moves coming by. So April 2023, they started 9% long. The next 4 series, we saw a 2,600-point move on the Nifty. November 2023, we saw an 11% long exposure. Over the next 2 series, the Nifty gained about 2,900 points. And even as recent as Feb 2025, the FI started their series with 11% long exposure. Over the next 5 series, we saw a 2,300-point move. For perspective, the September series, FI started with 8%. We've seen 110 points move on the Nifty already. Let's see where it goes from here. And for us to see where the Nifty goes from here, we have key triggers for the October series. The RBI policy outcome, the second quarter results that will come by. We'll also watch out for developments around US and India trade talk, which is underway, and festive season sales. Remember, this October, we have both Dussehra and Diwali and a GST cut. How does all of that impact the overall performance is something we'll watch.
Most important thing to watch out for. Mangalam, thank you for that update. Take a short break. Just as we do that, listen in to what Kevin Sneeder, the president of the Asia Pacific ex-Japan at Goldman Sachs, had to say on his outlook for the Indian economy and why he's bullish on India for the long term.
India still has some challenges and hurdles to overcome. From an economic growth point of view, the headlines look good, roughly 7% this year. So let's look at the fundamentals in India. And those fundamentals hinge on the financialization, it's a horrible word, but these pools of capital that are forming, the technology revolution, which India has really been a part of. Question as to how far it will do so in the AI space, but nevertheless, the software sector in particular, technology has really been a big underpinning. And the third part of it is stability. It's very important that stability and consistency of policy continues. So we're looking at that. Our investors have a healthy optimism around India over the long term, but there has been some wobbling in the short term, and we've certainly seen foreign investment flows recede in the last few months after really 6 years of steady increase. So a bit of a caution in the near term, but longer term, the reason we've made that commitment in the form of more physical space is because we remain very convinced about the long run potential.
Welcome back. Now, India's trade and economic partnership agreement with the European Free Trade Association is slated to come into force starting today. The EFTA bloc comprises of Switzerland, Iceland, Norway and Liechtenstein. Now, under this agreement, New Delhi has received an investment commitment of $100 billion in 15 years from the group, while allowing several products such as Swiss watches, chocolates and cut and polished diamonds at lower or zero duties. Now, my colleague Parikshit spoke to the Norway ambassador to India on the trade pact. Listen into what he had to say.
Well, I said India is the biggest market in the world. It will be the biggest consumer market. We are smaller markets comparatively. So of course, it's a disparity in one way. But all EFTA countries, they have very clear technologies, cutting-edge technologies in different areas. That means that there is complementarity between India and the EFTA countries. And for Norway, they are particularly in the field of energy and green energy in the maritime space.
Well, now the Dow futures may be down 150 points currently, but the main session on Wall Street yesterday was a positive one. The indices ended higher after a very choppy session. The indices recovered from the lows of the day. They ended higher because of a US government shutdown that is now almost imminent. The Dow Jones registered a record closing high. The S&P 500 also registering a positive September in comparison to the historical previous trends, the best September in 15 years for the S&P 500. CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
U.S. markets up across the major indexes in Tuesday trading, managing to end September with monthly gains. The Dow, which closed at another record high, added 82. The S&P 500 gained 27. And then that tech-heavy Nasdaq was up 69 points. Americans are feeling more pessimistic about the U.S. economy right now. The Conference Board's Consumer Confidence Index released on Tuesday showed a drop of 3.6 points for September, hitting a 5-month low. And then for the 9th month in a row, consumers said that they think fewer jobs are available. The survey also showed more pessimism about finances, as consumers' views on the current financial situation had the biggest 1-month drop since July 2022. And President Trump announced Tuesday the creation of Trump RX, a federally run direct-to-consumer website for Americans to buy prescription drugs. He also announced that Pfizer will offer all its prescription drugs to Medicaid at a reduced cost, which comes in exchange for tariff relief. Pfizer will also offer some of its drugs on the Trump RX website at a reduced rate. That's what's happening here in the U.S. Back to you in Mumbai.
Mackenzie Sigalos, thank you for that update. Let's also now listen in to Elise Ozenbaugh of JP Morgan Wealth Management, who gives her views on what could happen to the U.S. market and the economy once the government shuts down.
We've seen multiple government shutdowns since the early 80s, and what we found is that, one, they vary in length, but the length itself doesn't have all that much weight in terms of how markets perform. On average, stocks actually tend to rise. You actually see a modest decline in treasury yields. I think this time around, what we have to be mindful of is kind of the absence of some of that economic data should we get the shutdown and not receive things like the payrolls report this Friday, because it could just add further confusion and a lack of clarity to an already muddled macro picture.
Take a short break. On the other side, cues from the commodities market. Stay tuned. Welcome back. Now, U.S. President Donald Trump, while speaking to the press, said that Hamas has 3 to 4 days to respond to his 20-point peace plan. Listen to what he had to say.
Well, we're going to do about 3 or 4 days. We'll see how it is. All of the Arab countries are signed up. The Muslim countries are all signed up. Israel's all signed up. We're just waiting for Hamas. And Hamas is either going to be doing it or not. And if it's not, it's going to be a very sad end.
And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. All eyes on oil prices.
It is, yes. And the way that we've seen the movements come in here have been quite big as well. So when you're looking at the crude oil prices right now, we have seen a bit of gain, a two-day decline. There are two things to watch out for. One, of course, the October 5 OPEC Plus meeting, which is considering a production increase now for the month of October at 137,000 barrels per day. But for the month of November, it could be anywhere between 274 to 400,000 barrels per day. The exact number is what will move the crude prices going forward from here. Having said that, as you were talking about Trump securing Israel backing for a Gaza peace plan, but we are yet to hear from Hamas, and there is a bit of an uncertainty coming in from there. The markets will also watch out for the U.S. government shutdown minutes away from now, and that seems to be keeping volumes very, very low in the Asian markets right now. That's about crude, but when you look at the metal prices, we are looking at some gains coming back here. So gold prices did see some profit taking overnight, but we are back with some more gains. Remember, the previous quarter has seen gold gain by 17%, silver by 30%, and that's trading on a firmer note even right now. Copper prices, the supply disruptions have kept the prices at 2-month highs here as well, and copper has gained 11.5% in the previous quarter, 7% up for the month of September as well. So it clearly is metals where the volume is still coming in, prices volatile, and mostly on the green side.
Manisha, thank you for that update. With that, we call time on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call on the other side, set you up for the day's trade.